Okay, welcome to our weekly Forex market analysis call. And this is in preparation for trading for the week of June 11th to the 15th, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business. And so we have to be careful with our money, especially under the current market conditions, which are very, very volatile because of the geopolitical stuff that is going on. So let's take, so just be careful, just make sure you're protecting your capital. So as usual, we'll start off by taking a look at our Forex Factory calendar here. So first thing, so this is for the week of the 11th. So let's take a look. Coming up, actually one thing that we do need to keep in mind right now is that there's a meeting between President Trump and Korea. So, so this is where North Korea, President Trump and North Korea, Kim Jong-un is supposed to meet. They're supposed to meet. So now we need to take a look. Both of the Koreas are supposed to meet, right? So keep an eye on how these meetings go. So they're supposed to happen this weekend here today. And as we hear comments out of those meetings, it will be very important because it will have an impact on the safe haven currency. So as we hear the comments, if the comments are positive, so if we hear things like U.S. and Korea they're working towards a solution, North Korea is going to denuclearize and stuff like that, all those comments will be positive. If, however, they do not come to an agreement, that could be negative. And in that case, we may see the safe haven currencies go up and the stock market could have an bad impact. So keep that in mind. This is not something that's scheduled in terms of, it's not in news. It's just what's going on in the market. So just keep an eye on like Bloomberg, Reuters, Forex Factory, any of those sites will give us up-to-date information on what's going on. And it will be in the news section. If you're looking at Forex Factory, you want to look at the news section to see what's going on. But Reuters, see, this is where the information is coming from. Reuters or Bloomberg are better sources of this type of information. All right, so in terms of actual scheduled news, on Monday, we have manufacturing production numbers for UK. Those will have an impact on the British pound here. Average earnings index, this number is usually very important. So employment numbers are important, but average earnings number is important because if the employment is going up, they want to see the average earnings go up as well, because if you see increase in employment without the earnings increasing, usually we will see negative impact on the currency. So if both the numbers, the unemployment rate is low, and the average earnings are increasing, that will be positive for the British pound. And then we have CPI and core CPI numbers here. This is the inflation data that central bank will track very closely. So keep this in mind. Usually it tends to have a big impact on the currency if it's too far from expectation. So if it's either too low or if it's lower than expectation or it beats expectations, so it will have an impact on the currency. So lately we have seen some positive data come out of the US, but it hasn't really had that kind of a positive impact on US dollar. So if you see more positive data come up for US dollar and we do not see the actual move in the US dollar, that means we could be setting up for US dollar dropping. So keep that in mind as we trade. We do have Reserve Bank of Australia, Governor Lau speaking. Anytime there's central bankers speaking, it will have an impact. CPI, again, inflation data for British pound. This is important because central banks want to keep the inflation between 2 to 3%. So we are at 2.4. So if it's positive, if it's above 2.4, that will be positive for the British pound. But if it comes in lower, let's say 2.0, for example, or anything lower than this, this will have a negative impact on the British pound. So British pound will drop because this is, again, one of the key data points that the central banks will track. PPI number will have an impact on the US dollar as well. The biggest thing, though, this week will be the FOMC statement. So here, as we can see here, they are they're not scheduled to raise rates, but the market is expecting them to raise rates. So we haven't seen a rate hike in last few months. They are supposed to be raising rates this year. So this is what we are expecting. If by any chance the Fed does not raise rates, that will have a negative impact on the US dollar. So all the US currency, all pairs could go up as a result. But if they raise rates, it will have a positive impact, but a lot of it is already kind of priced into the market. So the positive impact may not be a whole lot. But again, FOMC statement will be the difference maker in this case, because everybody's expecting Fed to raise rates. So all of that is priced in, but their statement is where they could have comments, and because there is press conference right after here as well. So the questions that get asked of them will be the difference that it can all make. So keep an eye on that. Usually, I do not recommend trading this one because it can go back and forth. The prices can whipsaw very, very quickly, and brokers generally open up the spreads. So it's usually not the best one to trade if you are looking to do any of that. Okay, employment numbers for Australia. Again, these are important. Will have an impact. Now, on Thursday, we do have retail sales here and refinancing rate here. So this is the interest rate, right? So that again, and then we have ECB press conference after that again as well. So another central bank here, and that again, I expect it to be volatile. So be mindful of that. Again, it's the problem is they open the spreads so much, right? So if there's a 10 pip spread, it's just not worthwhile. And sometimes they will spike them up all the way to crazy amounts as well. So just be careful. Retail sales numbers, again, important data point that they track. So that will be important for the US here. And then we have third central bank. So this week, expect volatility. So for Japanese yen, one, we have Bank of Japan monetary policy statement here. The interest rate is negative. It is expected to stay the same. But again, the statement is what will make a difference, because the statement is where the market participants are expecting to see what direction the central bank is proposing or are going in. So this is where this will be important. And press conference, of course, as questions get asked in the press conference, you'll see fluctuations in price on your charts as the questions come out. So 3 central banks this week. Be very careful. Keep the position sizes small, because things can go awry very, very quickly. On Friday, not a whole lot after that. We have Empire State Manufacturing Index. But again, these central bank statements will be more important than anything else for this week here. Let's go on to the charts here. So we'll start off by taking a look at our euro dollar as usual. We'll go through the US crosses first. So this is what we have. Last week, we had a pin bar, and we were looking for price to go up. It went right into the pin here, which is where we were looking for price to go. Now, this is an interesting setup here. Now, we do have a bullish candle close, but we are into resistance. So what do we expect here? Now, because it is bullish, price could go higher. However, overall move is to the downside. And as price... So we could see one of these moves, right? So like that, or we could see that and then a drop, right? So my bias is to the upside, but I will be cautious here because it is into resistance and we could just turn around from here. So how do we trade this? I'm looking for price to, I will be looking for price reaction at 1.1830 level, which is back into this resistance. If the price breaks through, then I'm looking for price to retest that level, and I'd be looking for price to go higher. However, if the price does not manage to break that, then I'm looking for price to react at that level. So 1.1830 level here will be very important. If price stays below, or even the 50 level, so price stays below, then I'll be looking for price to drop from there. So that's how I will be treating this. Again, very important level. So sorry, 1.1830 will be the very important level. And if price goes and stays on the other side, I'm looking for price to go up. But because we have a bullish candle close here, my bias is to the upside. Pound dollar here. Pound dollar has been interesting. We did have a bullish pin bar on this one here as well, and we're looking for price to go higher. It did that. Now, however, it's a very small move. It's a bullish move, but quite small. We did have some fluctuations in price based on the daily here. So what can we expect? Again, it is into resistance, so I would be careful. Now, because it's bullish, there is some bullishness left, and we could see price go up higher. So the bias will be to the upside. But again, with these things, I'm very cautious right now because overall bias is still bearish. So either it could just pull back right over here where it is currently and then turn around, because we do have pin, which is the same size as the candle body. So it doesn't show a lot of momentum to the upside at the moment here. And because of that, I would be careful with this 1.3480 level. If the price manages to get to the other side of it, then I'm looking for price to go higher into 1.30 level and then potentially all the way into 1.3800. But like I said here, if the price does not break above 1.3480, in that case, we could see prices go test that level once again and do some sort of a double top or something, and then a drop from there. So I would be looking at 1.3480 on a smaller time frame to see how price reacts at that level. So right now, bias is cautiously bullish for pound dollar. Aussie dollar here. Now with FOMC, things can change because FOMC will be a market moving event. Aussie dollar here, last week we were looking for price to go up. It did go up all the way here, and then since then it has fallen. So what can we expect right now? So there is some bullishness in this candle, but overall that's a big rejection of the price here. So what we could see is I'm looking for price to drop from here. So my bias on this one is to the downside, and I'm looking for price to drop. Target would be a 1.3420 level here. My bias is to the downside, but again, I will watch out for a pullback, see if price may pull back like that, or even go higher into this previous support or resistance area, and then a turn from there. But the bias for Aussie dollar is to the downside, and the target is a 0.7420 level. New Zealand dollar here. New Zealand dollar did better than Australian dollar did last week. So this one, the candle close here is bullish, and we could go higher. So I'm looking for price to go into this 0.7100 level, which will be the next support and resistance area here, and above that into 0.7150 area, and even potentially into 7180, so 0.7180. So right now the bias is bullish, and we could see price, so overall is bearish, pull back, and then one of these moves. So right now I'm looking for it to go up further. Dollar CAD here. Dollar CAD has been sort of going back and forth here. We have bearish to neutral candle close, and the reason for the last 2 weeks is just traded in this range here. So price hasn't really broken below the low of 128.20, hasn't gone much higher than 130.60 here, back into this resistance area. So right now we have pins on both sides. We have a small bearish candle body. For this one, it could go retest the high once again, and it could give us a good opportunity here. If it goes and retests the high and holds below, I'd be looking for price to drop all the way down into the bottom of the range. And then if it breaks below, second target would be 1.2680 level. So right now it's neutral. It's neutral to bearish here. but we could get a retest of the high once again. So that would be a level I'd be watching. It's range bound at the moment, selling at the high, and I will be watching what it does at 128.20 because it could bounce back into the range there as well. But if it breaks down, then 126.80 will be the next target to the downside. So bearish to neutral would be the bias here. This one we have, looks like it's marking up some charts. Let me get rid of all this. Okay, so this one has been interesting. It's just been treading water for last several weeks here. It's in a range and it stayed in the range for all these weeks. So right now I am looking for it to stay in the range as well. And I will trade this as a range bound. If price gets into 0.8850 level to the upside here, I'd be looking for a potential sell. If it gets into the bottom here at 0.8690 level, so let's say 8700 level, there may be a potential buying opportunity. If it breaks down though, I'd be looking for price to go lower here. But right now it's been range bound for several weeks, so I'm neutral on euro pound. Euro Swiss franc. This one, we had a big pin on the bottom there. It pushed up, but this one does not look particularly bullish. So it is a bullish candle close. It could go higher. So I actually shouldn't say that it cannot. It can go higher. So the target here would be 1.1720 level. However, it could do one of these. So we have bias to the downside, pull back and drop as well. Or it could go pull back higher into 1.1720 level and then drop from there. So right now it is into the pullback mode. It is into resistance at the moment. So if you see there are multiple pins on this side, and generally when there is resistance, it can just go test that level once again. And if it stays below this level, then I'd be looking for price to come back into the bottom here once again at 1.1460 level. But if it breaks above the high, then it could go into 1.1720 or 1.1780 level. So both of these would be valid. Now, the conversations or the meetings between the US and Korea will be important, and they will play a role here. And if the meetings are good, then Swiss franc, so this one could go higher here. But if the meetings are not positive, then we could see Swiss currencies, Swiss pairs drop, because then it will cause this whole risk aversion and prices of safe haven currencies, Swiss franc, Japanese yen, are likely to go up, which means the crosses will go down. So keep that in mind. So right now it is bullish. If it goes above 1.1440 level, I'm looking for it to continue on higher into 1.1780. If it holds below this and this resistance is strong, so I will look for reaction here, then we could see a drop into 1.1460 level. Pound Swiss here, this one has been range bound here. It's pulled back. We had a neutral candle close here. We have a neutral candle close again. If you take a look at the daily, it has been trading in this range here again. So right now it is slowly making its way up. And in this case, it doesn't look very strong at the moment, doesn't look very bullish. It is neutral, so it could go either way. If it breaks the high, though, it does open it up for this move higher into the next support and resistance at 1.3480. But if it stays below here, which it is holding below that resistance level at 1.3268 level here, then it could continue lower. And the target here would be 1.2900. So again, right now, several of these currency pairs are into resistance. So we just have to be careful, and we have to look at how price reacts at the high here. And if it stays below, then looking for price to come down. Otherwise, looking for it to go up. So it's not clear cut at the moment. This one here, dollar Swiss franc. It's been down here. Now we do have a pin in the bottom from our weekly perspective. On the daily, it's been holding this trend line. It's closed higher here. So with this one, it could respect the trend line. So if it stays below the trend line, it could just bounce off of that once again and kind of go like this. But we have to be careful. So again, from the weekly candle here, there is still bearishness in this candles because we have the red, but there is large pin in the bottom, which suggests that prices could turn around. So looking at the daily here, the way I'd be looking to trade this one would be, I would be looking for a reaction into the trend line. If it holds below, then I'm looking for another push to the downside. In that case, target would be 0.9780 level. And if price breaks out to the other side, first target would be 98.95, so about 0.9900. And then so I'd be looking for 0.9900, or we can go higher into next target would be 0.9950 level to the upside. So I would look for a reaction, and the bottom here could be important here as well, because it could just retest the bottom and then bounce up as well. So that's our Swiss franc. And now Euro CAD. Sure. Okay. EuroCAD here, weekly candle. Let's see. All right, so here we are into this resistance. So price has been dropping. It has pulled back. And now we have a large pin on the top here. So in this case, even though we do have bullishness in here, so price could come retest this once again and then drop. But overall, I'm not really looking for price to be overly bullish here, because this is the same thing that we could see on the right-hand side here as well. A drop, pullback, and another drop. So I would look for price to retest higher, either into this support and resistance over here, or all the way into the top, and then do a drop. And I'm looking for it to come back into 1.4930 level to the downside. Pound CAD here. Pound CAD, again, not huge in terms of, we did have bullishness last week and it went higher. But now, if you take a look at it, price has dropped from here. And so let's take a look. What do we have? So we have a large pin on the top here, but there is still bullishness in this candle. So overall, I am looking for price to drop here into 1.7060 level. But we just finished G7 meetings, and we'll talk about that in just a minute here, or actually we can talk about it right now since we're talking about Canadian crosses. Okay, so with the G7 meetings, they didn't go quite the way all the G7 participants had hoped they would go. And the problem is because there was contention between US and other G7 countries, because US recently announced tariffs on aluminum and steel. And with Canada in particular, Canada was hosting the G7 in Quebec here. So what's going on there? Prime Minister Trudeau tried to be diplomatic, but in his very polite way that he tends to do it, trying to not ruffle any feathers, because everybody was essentially upset about the tariffs. Nobody wants the tariffs. Everybody wants free trade. So now the way things ended was US left the summit before it finished. They were able to put together a statement that was accepted by the US, but then later President Trump tweeted and threw out some personal insults against Prime Minister Trudeau and things like that. So now that is bound to have negative impact on negotiations. So as a result of that, Canadian dollar could take a hit, because NAFTA is not good. So for Canada, US is the biggest trade partner because of the proximity. So if Canada is, and actually President Trump talked about tariffs on autos. So there are multiple plants in Canada that make auto parts and automobiles that are, that are shipped into the US. There's certain models that are made, and likewise, there's certain models that are made in the US and then shipped into Canada, and vice versa. So there's this flow of trade, I suppose, in auto industry back and forth between Detroit and Toronto here, Ontario. So now if there's a concern that there may be tariffs on auto industry, even though they have not been announced right now. So NAFTA talks are falling apart because of the tweets that are going back and forth between Prime Minister Trudeau and President Trump. And then there was talk about bilateral talks between US and Canada and US and Mexico. Now, NAFTA is between three countries. However, US was talking about maybe doing them separately. So all of that basically adds brings uncertainty into the market. When there is uncertainty about a particular currency, that currency tends to go down. So as a result of this, because Canada will actually fare worse in this trade negotiations should they not go through, Canadian dollar can be impacted negatively. So keep that in mind as we are trading all these Canadian dollar pairs. If the market shrugs that off, and market is known to do that because this has been going on for a while, if it shrugs it off, then it's fine. But if the market, or if these tweets and all of those comments escalate, it could have a negative impact on Canadian dollar. So that's something that we have to keep in mind. So this is how market sentiment, or what the political leaders say, will have an impact on the market, even though it's not direct news or anything like a news data event or anything. So keep that in mind. Right now, this looks bearish. So I'd be looking for price to drop into 1.7050 level. But should these comments and things like that escalate, this could push up all the way into the high. So I would be cautious this week, just coming out of the G7, about as to how Canadian dollar will be impacted, because Canada is right smack in the middle of it. All right, let's do Japanese yen crosses here. So with this one, this is interesting as well. We were bullish last week. It went up, but it's not overall. It's still looking bearish in the overall view here. So what to look for here? We could see price push into the trend line once again and then drop from there. That's what I'm looking for. Basically, price to push into the trend line and then drop. So my bias is to the downside after a pullback. And in this case, my target to the downside will be the bottom of this pin at 143.20 level to the downside. So bias will be bearish, and I will leave this trend line here so I can see the impact of it as price moves. So I'm looking for a pullback into the trend line and then a drop from there. So bias is bearish. Now, the result of the talks, of course, could make a difference. So keep that in mind, because we have a US meeting with North Korea and South Korea at this point. So those conversations, or the results of the comments that come out of those conversations, will have an impact here. But with this one here, we have a bullish body, but a large pin, which makes it neutral here. So bullishness gets canceled by the large pin on the upside. So this one is neutral at the moment. How do we trade this? Price goes into the high. I would be looking for a reaction at the high here and see if there's a potential selling opportunity, because I'd be looking for price to come into a 127.20 level. Now, should the talks go really well, which I don't really expect that to be the case. However, whether they go well or not, how they are phrased can make a difference, right? So if everybody coming out of that meeting says, "Oh, you know what? We're happy with the way talks progressed, and there is hope here. Looks like we will at some point come to an agreement," that will be positive. And in that case, we are likely to see euro yen go up here and all the yen crosses go up, because that is positive, creates positive market sentiment and creates this risk environment. So investors are willing to take more risk. However, the higher likelihood is that they don't go well. But we have seen both sides. We have seen comments where they said, yes, they're willing to talk, they're willing to make changes. And we have seen negative comments. So at this point, market will wait and see and adjust as these comments come out, but they can be a driving force. So keep that in mind. So in this case, it's neutral. I would only look to trade this at the highs, looking for a potential reversal setup. And if it comes into the bottom here, we could see a potential push to the upside. So it's almost like trading a range-bound market. Dollar yen here. Dollar yen, we did see from last week, we were looking for price to go up. It did go up, and now we have a pin here, and I'm looking for price to drop here. So this is bearish, looking for price to come back into 108.20 level to the downside. So bias is a bearish for dollar yen. Aussie yen here, this one, the yen crosses have been quite interesting lately. So this one is trading in a range at the moment. So this is our range that prices have been trading for last several weeks. So at this point, I am expecting it to stay in the range. There isn't anything really conclusive that had changed here. So with this one, there's large pin on the top. So last time we had a large pin here. Now, we do not have a red close on the candle like this one, but because of the large pin, I'm looking for it to go into the bottom of the range. Now, it could pull back into this resistance level, but bias is to the downside, and I'm looking for it to drop into 8100 level here, back into the bottom of the pin bar here. So bias is to the downside for Aussie yen. CAD yen here. CAD yen is looking very neutral. Price has pulled back. And now we have a neutral candle close. We have a pin on top, pin in the bottom, and it's sitting over here. So in this case, my bias is more in terms of a range bound. I'm looking for a range bound type of move. It could push up higher here again, and then I'd be looking for price to react at the high at 85.80 level or 75. I'm looking for it to stay below this and come back into it. The large pin here shows that there's weakness in this, and we could see a drop here as well. So overall, my bias is range bound here, but I would be looking for price to drop either from where it is with a slight pullback here, or it could pull back all the way into the high, and then I'm looking for a reaction at the high or a drop at from there. So bias is to the downside. Gold. All right, let's take a look at gold. Gold has been range bound here. Price just has been going sideways here. Okay, so we're looking for, so here so we had this drop and then a pullback, and then I'll be looking for price to drop further, but we haven't really seen a drop. It's just gone sideways. So normally we would look for a continuation move to the downside. So the way this one would look will be like this, right? So I'd be looking for that. What's happening here is just sideways move. It's a very, very small sideways move. Price is holding below this 1304.25 level. So as long as price stays below this range that price was trading in, the bias is still to the downside. Now, if it breaks out, because it is holding in the higher part of the range, not the lower part, it could come back into the range. In that case, my target would be 1326.60. So what's important is this level here, 1304 to 1310, slightly higher here, that level. As long as price stays below, bias is to the downside. Now, if it crosses it, I'd be looking for price to go into this 1326 level. So it needs to be, it's yet to be seen how this goes. Overall bias is to the downside though. Oil has been another one of those. We have based on, this is where the comments are so important, based on the whole, the comments about oil, potential oil shortages. We saw oil go up. And last week, I think we saw the news that President Trump had asked OPEC to increase their production of oil. So if OPEC increases the production of oil, there is no concern around oil shortages because they have actually clamped down on the oil production because they're trying to keep the prices of oil steady. But after the comments that President Trump has asked OPEC to increase the production. Of course, OPEC doesn't always do what President Trump may ask them to do, but OPEC, if there are shortages, of course they will increase production because all the OPEC countries want to increase production so they can make more money on oil. So that's what's going on with the oil. So we have seen multiple weeks of drops here. Now the momentum seems to be decreasing here, and we are still in this kind of an upward trend right here. So it has sort of closed, kind of gone through it, just like this one here, but we have a pin bar here. So in this case, price could go up. So basically, based on this doji here, my bias is to the upside. I will look for price to go into the 66.94 level and potentially even into 68.50 level. But the first target would be, actually, let's do 67.44 will be my first target. And then above that, we could go into the high here of 68.50 because we do have this pin. So I'm looking for price to go back up here. And if you take a look at the daily, it really has been dropping overall. So here we dropped, price dropped, pulled back and dropped. And now see how it's holding. So it could go higher. But again, we are into this resistance here. And that could, like this resistance right here. So if it stays below, it can continue lower. But overall, I'm looking for it to pull back based on the weekly close here. I'm looking for it to go higher. So bias is to the upside for oil. And somebody had asked me about copper. Copper is looking super bullish, but we are into the high here. So if you just zoom out a bit here. Oh, that's all I have for the chart. Okay, so here we are into the resistance, and we could see sellers because last time price came here, it dropped. Now there's a huge push to the upside, but we could see price drop from the high, and it tends to happen because especially when we haven't been here since November of 2017, we could see price react at the high and then drop from there, which is not to say it becomes bearish. It's just normal reaction to important resistance level. And then in that case, I would look for, it could drop all the way down into 3.17. The first one though would be 3.22, I would say. And then below that, we're looking at 3.16. So those will be the two levels that I'll be watching because that's quite a bullish candle. So kind of like this, when we have a big bullish candle, we normally tend to see a pullback and we are into solid resistance here. So I'd look for price to drop and then it could come back down into 3.16 level. But there is a little bit more room to the top here. So I'm not looking at reaction right where it is. I'm looking for price to go into the high and then see a reaction. All right, any other questions? Oh, beta tester offer. Okay, so let's talk about that. So right now I am offering Trade Copier service. So basically I'm launching the Trade Copier. A lot of people have asked me about managing their accounts over time, and I cannot manage anybody's accounts. I'm not a licensed investment advisor, so I cannot manage anybody's accounts. And so anyway, so what I can do is offer a Trade Copier service, which is the second option that people have been asking for. And so far I've been reluctant to offer this because it's stressful and just takes a lot of responsibility. But I am looking to do I am doing a beta test of this to see how things go. If I like it, if it works for everybody, and if there's a win-win situation here. So in the Trade Copier service, basically, it would be a subscription-based service. You would essentially connect your account to my account, or it gets connected to my account. It is on MT4 platform only. I'm not offering it on any other. This is not a PAM account. This is an actual MT4 EA that attaches the two accounts. So you would have full control over your account. I cannot touch your account except for pushing trades out into it. So that's what I am looking to do at the moment. And the way this works is essentially I am working towards, actually this price is not correct. So it will be at, my final price will be at $9.97, but currently I'm only offering it at $2.97 a month actually. So that would be the next jump up will be to $4.97, but right now it's $2.97, and the yearly subscription will be at $29.70, which is basically $247 a month. I think you will get, and not including the course here. So this is basically the subscription. It will continue on you can totally sign up in 2 weeks' time. That's totally fine. It will continue on for a period of time. I'm not looking for thousands of subscribers here, just looking for a few people who are willing to test the service with me and provide me some feedback on their experience of it, and see how everything goes here. If you want to sign up, there is both monthly and yearly subscription options. You can go to bit.ly/Venus Copier monthly or yearly, and I will include the links in the description as well. So you can go check it out below. All right, any questions? Will it be available through September? I think yes, likely. I think I will likely change the prices in October. So give it a good 3 solid months of beta testing because, you do need at least 90 days to test it out. So yes, very likely. Yeah, I think it will be okay. So October is likely where then we go into sort of the fall trading, which tends to be a lot more lucrative. Over the summer, the liquidity drops. All right, any other questions before we wrap it up? Okay, if not, you guys have a wonderful trading week. Be careful with the increased volatility due to political events, as well as the Fed events or central bank events. 3 central banks on tab this week. So just be careful while you're trading. Have a great weekend and trading week, and I will see you next time. Bye for now.